Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Sean Udall on the line of the Tech Stock Strategist, joining us to give us his take on the market. Sean, how you doing today?
I'm doing good. How are you guys?
We're doing good, getting ready for the long weekend. We're going to start out a little different here. We talk a lot about the technology stocks here, and you're dabbling in the biotech sector here a little bit. What's on your radar in the biotechs?
Yeah, well, a few things, but mainly, so to preface it, I don't really like biotechs here. I especially don't like the big ones that kind of everybody else does. I just think there's a little bit of danger. Evaluations are a little bit high. The joke is, this is one thing I kind of agree with Yellen on. She was just a year earlier more and calling it the biotech bubble, right? So, but in all seriousness, I do dabble. As you know, I do balance sheet work and I do quite a bit of due diligence kind of on everything I look at. And what was interesting is each time the biotech sector has sold off in recent weeks and months, but the big guys always pop back and keep going. The IBB goes to new highs. Underneath the surface of the biotech space, what I started picking up in a lot of my chart screens and some of my work is a ton of damage in sort of the small to mid cap biotechs. So Cala, C-A-L-A, Calathera Biosciences kind of hit a radar technically. So by the way, it and about 5 or 6 other names, maybe even 15 other names. So I started digging into it, researching it, and they've actually had pretty good data 2 or 3 times. And this is like a pure spec play. But when I started buying it, it was basically trading for 2 times net cash. So about $200 million market cap company, they about 110 million in net cash. Their cash burn is maybe, I think they said their cash burn is supposed to be less than 15 to 16 million per year. So they don't need to do a big dilutive offering fairly soon. So that got me interested. And then they've actually had good data a couple times, and the stock has spiked a few times. So I've actually traded this more than once. I just bought it again here recently. And they had good data again yesterday. And what was interesting, if you look at the chart, look at the action, they've had these big crazy spikes on sort of less real data, sort of some data, but it was very thin. There wasn't much to it. Yesterday was the first day they had actually probably a more meaty piece of data, like an actual trial with results, with some meat to it. And the stock had kind of this muted reaction. But I mean, I've been around this game a long time, seen this before. In my estimation, by the way, the volume was huge. It was way bigger than normal.
Yep.
So my estimation, now that you actually have real news, and now that you actually have something that's meaty and tangible, well, guess what? I think the big boys now want it more. So what do? They VWAP it. They call their guys and say, hey, I don't just want 20,000 shares of Kale anymore. I want 100,000 shares or 300,000 shares or whatever. But I don't want to pay over 12, or I don't want to pay over 12.50, or I don't want to pay over 12.75. And anybody that kind of knows how the institutions work, sometimes these big guys, I mean, it might take them a week to round out the position if they really want something. They're actually building a big position, so they're going to try to do their trades and parse their trades over a number of days and pay the price they want to pay. And I've seen this over and over again, where sometimes you get a muted response early to really good news, because you got a lot of big guys wanting to buy the stock for a certain price and not over a certain price. So anyway, you never know. Trading's always a gamble. Everything we do is just based on a kind of a matrix of probabilities. This is one I like. I feel pretty good about. I'm kind of thinking, maybe if it breaks 1475 to 1550, it looks even better. I'm thinking maybe $20 or higher on this thing. So this is a spec play I like. I'm not going to commit overly too much capital to it. But for somebody like me who doesn't really like the biotech space, because I can't just get there on my valuations and things like that,
Right.
I can get there all day long on this one from a valuation standpoint. And I like the fact that this relatively cheap stock with some promising technology. And they're also going to present, I think they present on June 11th too.
Could
So
be a
I've done a fair
catalyst.
amount of work. I like the data. There's some other catalysts in front of it. So that's a biotech I like.
What are they working on? What do you know what kind of?
They're a cancer fighter. So, they're in this immunotherapy therapy game, cancer fighter. I can't pronounce. They've actually kind of have a unique take on it. They've discovered an inhibitor of, is it glutaminase or glutaminase or something like
Yep.
that? But anyway, that's kind of their game. The other thing I do like about it, they're not kind of a one-trick pony. If this technology works, there's lots and lots of applications. Like I say, people are interested. They actually have a pretty good website. They have a pretty good, the backers on it. Like one of the first things I do is I look at, okay, who were the VC backers before the thing IPO'd? And they have a strong list of backers. They have a really good list of investors, and they seem to have a pretty good, management and science team. So anyway, that's, still to this day though, I mean, every biotech is still a gamble, but yeah, this is one I'm willing to dabble in, put some money in. And every time I've bought this, I've bought it sort of 12 or below. And I think this is the third time I've traded it now. I got a little bit lucky and I caught that one pop. I wasn't in it for the first one. I kind of got a little lucky. I caught that little first pop where it popped to like 22, but I sold it I think I sold it like 17s. And then I caught the last pop. In fact, I started buying it around 12 again, and I kind of was nibbling all the way down to like 10, and I didn't buy anymore as it went into the 9s. But there again, a few days later, about a week later, it had that pop into the 14s. But again, what I like more than anything is you actually had some of the best real meaty news, and the stock kind of had a muted reaction. So I was actually able to buy some more yesterday because the stock just wasn't up very much. Okay, so I'm like, hey, this thing's only up $1 on real news. I'll take it.
Speaking of biotechs, I got to get your take here on Bluebird Bio Inc. Had a big move. It was trading much higher, pre-market trading. I mean, this kind of move, I'm thinking in my back of my mind what happened to Biogen. I don't know if you remember that. Parkinson's news, gapped up, went 480, and then the bottom fell out of the stock. I mean, just looking at this Bluebird Technologies, of course, things never, repeat themselves perfectly here, but just taking a look at that chart here, I mean, you got any thoughts on Bluebird?
Well, I do. Bluebird kind of hurts me because I actually had Bluebird in the 30s, and I made a little bit of money trading it a few times. And it was just, how sometimes you kind of get in this rhythm and you're trading, oh, hey, I took a gain. Well, basically, I traded a couple times, okay, made a little bit of money, and I just wasn't in it. I liked it. I just wasn't in it the last time before they had the news where they went crazy. So, now, full disclosure, had I been in it, I would have sold it between 85 and 100 for sure because but would have been in it 35. You give me a $50, $60, $80 pop in a biotech, I'm gone, right? But yeah, I actually know this one fairly well. This is a good example. They have really good promise, really good technology, but I mean, this is a company that basically has no revenues. So they've had a very limited number of trials. It is promising because what they're saying they can do is they can actually not just treat a disease, but with their therapy, they can bring a full cure to play. So that is a pretty unique proposition. At the same time, I think the number of people in their trials is pretty low. They have a limited number of trials. I mean, you got almost $5.5–6 billion market cap on like a zero revenue situation. So, I was willing to dabble in Blue early on when it was a $25 to a $35 stock. I just can't there's just no way I can put money into it here. And you never know. Hey, if you want to bet against something like this, you could look at the 100 puts or the 75 puts. Something that's way, way out of the money. And you could just say, hey, I'm willing to risk 50 or 75 cents or $1 on some puts that are 70 points away. And if something terrible happens, you could get a big score. But to me, it's just Bluebird has kind of become unplayable, at least for my disciplines. A stock I was in did real well with, and it was in pharmaceutics, PCYC. So, I was in that stock in the low hundreds. Now, I missed the run from 25 to 100, but when I was buying that stock, I could get there from a valuation standpoint. I didn't feel too bad about it. But yeah, there's just a lot of these that just can't do. They're tough to short because, what if Bluebird really does do what they say they can do? It's probably worth more than it's selling for right now. But I just can't get there on for a purchase for me. There's not much I can say other than I do miss the fact that I missed this stock and I had shares. I was ready for a big move and I just kind of got unlucky that I had taken a small gain and was thinking of getting back in. And I just didn't own it at the time that it popped. But that's sort of one of the vagaries of biotech investing, is that you just have to accept that those things are going to happen from time to time.
Yeah, you can let that you get a little bit too cute sometimes, and then it makes the big move, and you're left out. That's definitely happened to me before. Let's talk about the biggest stock in the world, Apple Computer. You've made some great calls in the past on that. Really didn't get rewarded for its earnings beat. Had run up into it substantially. Sold off, now coming back. Give us your take on Apple. And before you came on, you said you think it's going to 145 in pretty short order here. Give us your thesis for that and what your time frame is.
Yeah, I mean, that's basically it. So in fact, I've had comments on this for a long time. So I was kind of dabbling on the 128s a couple times when it dipped in the 124, 125 area. So I was doing like week twos. I typically don't do weeklies, but I'll do 2 to 3 weekers. And I actually rolled my last 128s. I rolled up to July 140s. So I have comment, but I'm also playing the July 140s. So by the way, I think the move to 145 plus I think it's going to happen before July, but I bought July's just to give me some more time. But I mean, I kind of think we're going to get there before the next earnings report or earlier. Again, people are just coming around to the fact that, when I saw the two iPhones, I said, hey, the Twin Towers, large screen devices, this is not going to be the typical 2 to 3 year upgrade cycle. This is going to be a 2 to 3 quarter upgrade cycle. This is going to be a 2 year upgrade cycle. Now, the 2 year upgrade cycle is going to encompass the first 2 iPhone 6s, and it's going to encompass the next version of the iPhone, whether it's a 6S or a 7. But again, we're seeing it. Apple's gaining market share. I mean, frankly, I can make an argument the stock really should already be between 142 and 150 just based on the strength of the last quarter. But, I mean, the market was sort of ready to correct. We kind of had a market correction. You cannot get the market to correct at all unless you can get Apple to correct. So they took their proverbial 10 points out of Apple, right, from 135 to 125. So I kind of think it's gone through it. And I think the stock is still one of the cheapest stocks out there. And in fact, there was a funny Bloomberg story I was reading the other night where, let me see if I can find it. So there's 2 exchanges in China, but their small cap index the one that's gone up like 160% in the last 12 months. The average PE in that index, I think, is like 116, and Apple's PE is 16, right? So, as you know, I don't even do PEs. I do forward PEs, and I do PEs net of cash, and I do, other things like that. I mean, if you look at Apple's forward PE and you net out the cash, I mean, this thing's still below 10. I mean, you have the premier growth company in the world gaining share, doing disruptive things. On valuation, the stock really should probably be, if it just traded in line with the S&P 500, it should probably be 165 to 180 right now. So that's kind of my ultimate bank. Now, that's not short term. That's more kind of intermediate to longer term. If it just trades in line with the S&P 500, again, you got at least 30 points. You might have 50 points in the stock. So, but near term, I think it's, again, the iPhone's doing well. I don't think the watch is going to do nearly as terrible as the naysayers. I have 15 million units. That was my number from the very first. I think they're going to hit it, maybe a little better. But I think the watch will be a product that does exceedingly well in years sort of 2.5 on, right? So I think the watch the first year, it's more of a production issue. I mean, Sapphire's tough to make. I think the phones take a little bit longer to make. Apple hasn't fully vetted out their suppliers for it yet. So it's probably going to take them a year to 18 months to really figure out production. And then once they do, they'll be able to punch a lot more of these out. In the lead time from ordering to when you get your device won't be so long. But I think the bottom line is basically there. They've had their 10-point proverbial correction. I think the stock can basically at least gravitate to something closer to where it should already be trading at.
What are they going to do with all their cash?
Well, if you're in the icon camp, you think they should buy back a lot of stock. I actually kind of think that they probably are buying back the right amount or have bought back the right amount. My lone criticism of Apple now, my huge criticism used to be that they weren't making large screen devices, and it was lunatic. And so they fixed that. Probably my lone criticism now is I actually think they should be more proactive in M&A. I think they could buy a lot of things. I think they actually could buy some revenue. I'd like to see them probably buy, they're developing search technology. I would like to see them buy more search technology. So, I mean, put it this way. Apple could buy $5 to $10 billion of M&A a quarter. Let's say they didn't overpay for it. So let's just put an easy number on it. Let's say they bought $30 billion of M&A a year. They only paid 3 to 4x multiple on it. That means they would increase their sales by $10 billion a year just through strategic M&A. And there's a lot of value you can derive out of M&A as well, besides sales and things like that. But I mean, they basically could increase sales by $10 billion a year, almost in perpetuity. Again, what does this remind me of? Something like a Berkshire Hathaway, right? Where if in fact, it's kind of my coin term for Apple. It's the Berkshire Hathaway of Silicon Valley, if they want to be, right? So, but you just can't keep perpetually buying stock back, because stock buybacks make sense when the stock is cheap. And I still think Apple stock is relatively cheap, so buybacks make sense. But, if Apple stock is 200, I don't want to see Apple buying a bunch of stock back. I mean, we've seen the fallacies of IBM buying stock back too high and Hewlett-Packard buying stock back too high. And years ago, Dell was famous for buying back stock too high. So you want to be you want to buy stock back when the stock is cheap, and then you don't want to buy it back when you think it's kind of expensive. And that's exactly what Berkshire Hathaway's done. But I think they should do more M&A and keep doing buybacks. I'd almost like to see them eliminate the dividend, but they probably won't at this point, because I just don't believe you need dividend for this.
Yeah. Let's talk about Hewlett-Packard a little bit here.
Sure.
Yeah, trading up nicely here. We did get some decent earnings, had major resistance at the $34 level. Boy, I was hoping they would get a pullback to there, but gapped up. And now,
I wanted to buy them. I wanted to buy, not to cut you off, I wanted to buy Hewlett-Packard at like $32.50. I'm just like, God, if I could get to this thing at $32.50, it would be a home run buy, because it'd be a really good retracement from the prior high, right? And it's traded in a compressed range. So this one, I'm going to take off my fundamental hat and go technical. I actually like this technically. Again, I was really hoping it was going to go to 32.50, 33. Didn't quite get there. I had a chance to buy it there a couple days ago, but I just don't want to buy it in front of the print. But here's a great case in point. Expectations are pretty low for Hewlett-Packard. They didn't have a great quarter, but that's the beauty of it. They don't have to have a great quarter for the stock to work. Again, 3D printing technology is going to be a big deal in the future. It's going to be a bigger and bigger and bigger industry. It sort of reminds me of the solar industry, where it went huge feast for a few years, then it went into a famine phase for about 2 years, and then all the things that make the industry compelling sort of just kept working, and then so solar kind of got to its natural growth rate again. I think the 3D printing industry is going to do the same thing, and I think Hewlett-Packard is going to be a massive player. So again, the only criticism I could say about Hewlett-Packard now is that now that we've seen an absolute just demolition of the prices of all the 3D printing stocks that are currently publicly traded, I kind of think they should buy one of them.
I was just gonna ask you about that,
sure,
because there was a rumor earlier in the week that they were looking at 3D. Boy, that stock has just been decimated. If they did dabble into it instead of spending the money to create through their own R&D, who do you think's the likely candidate?
Well, the two best are 3D and Strategist, and I could make an argument they should just buy both of them and consolidate the industry. And the fact that the 3D printers are so beaten up now, I don't know if they'd have much of a DOJ issue, because a lot of times you tend to have DOJ, which is Department of Justice, right? The anti-monopoly guy. So if you tend to have Department of Justice issues and anti-monopoly issues in industries that are hot and big, that have a lot of attention. When an industry is sort of in trouble, if a big company, were to come in and consolidate it, a lot of time, I don't think they'd face the kind of anti-monopolistic scrutiny. So anyway, bottom line, I think they should buy one or two of the names. Either that, or they could buy like 3 or 4 or 5 of the little guys that, again, used to trade at $40 that now trade at 7 or 8 or 9. But I think they're going to be a big winner in 3D, the 3D space themselves. I think they should do both, Joel. I think they should develop their own 3D technology in-house, which they're doing. But I mean, with those publicly traded stocks out there this cheap, I mean, what's Triple D out here? It's all the way down to a $2.5 billion market cap, and they could offer 3.5 to 4 billion and buy them. What's Stratasys here? Stratasys is 1.9 billion. Same thing. They could offer 3.5 billion, probably buy it. I really think it'd be crazy not to buy one of those two names, because just the intellectual property, the teams, everything they would get for the deal would be such a good deal. Anyway, I don't know if they will. I don't know if they won't. But full disclosure, I've been trading both of them. I'm in a 3D position right now, and I'm basically in it. I don't really love the name, but at 22.40, I'm like, I got to own some of this just because they could get bought out, and if they get bought out, it's going to be at least a 50% premium.
Really? Okay. Well, we'll keep an eye on that one as well. I know this is way out of your wheelhouse, but Shake Shack. Have you been following that stock at all?
Yeah, in fact, I called for a short just the other day, and I couldn't get a borrow. I have shorted this a couple times. It's really tough to get a borrow. I think the last time I called out of 4 times to get a borrow. I got a borrow once or twice. So I'm going to call for a borrow again today. Basically, pretty much at 90 and above, I'm going to call for a borrow every day. So it doesn't mean I'll get a borrow, but I'm going to make calls and try to get a borrow every day. In fact, I might make 2 or 3 calls for a borrow. But yeah, if I could short the stock, I would. I'm kind of glad I didn't get one 2 or 3 days ago, because I would have shorted it at what is this? I would have shorted it about 85, maybe even 80. Nah, actually probably 82. I think is right where I was calling for the borrow. So sometimes not getting a borrow is actually not a bad thing. But I mean, here's the thing: even if I shorted 82, there's no way I'd cover. I mean, I don't even know what this is worth, but is it worth 50 million per store? I don't think so. Is it really that much better than In-N-Out Burger, which is the greatest burger chain in the world? No, which is private. So I don't know. I mean, this reminds me a lot of GoPro at $85, and we all know what happened to GoPro. This reminds me a lot about Twitter at $75, and we all know what happened to Twitter. I could go on and on and on. There's a lot of companies with a limited float that go off the IPO and go nuts. Well, they're just kind of going nuts because there's just nothing. There's nobody there. There's no shares to sell. There's no shares to short. The lockup comes and everything kind of equalizes and gets back to a price that makes more sense.
Okay, we've been on the line with Sean Udall, tech stock strategist, dabbling a little bit in the biotech, giving his thoughts on Shake Shack and the overall market. Sean, great input as usual. You like to focus on the numbers, and that's what counts eventually.
By the way, before we leave, FireEye's breaking out. 45 was the key level, so above 45, there's a lot of space above.
Okay, we'll keep an eye on that. All right, Sean, thanks a lot. Great input. We'll talk to you again soon.
See you guys. Thanks for calling.